Guys, it's a beautiful good morning. Welcome to my YouTube channel. So let's get, without wasting much of your time, let's get into the analysis. All right, so we are on the screen for GBD USD, and they're trying to figure out the next possible move. So this is a forecast and not a signal. And I'm not a financial advisor. I'm just posting my idea. All right, so where are we currently? So the first thing you try to do is to find the order flow. So if I look at this, we are taking out this low here. So the order flow for GBD USD has been bullish, right? So that was the order flow. So if I was to be trading from this bottom here, I would have been going long. So let me just get my path to here. So if I was I don't know what's up with network every time I try to. Okay, so from this level here, we see prices was going up to the upside. We saw this order flow play out. So this was the current trend for GBD USD. Okay, so now every time I'm analyzing the chart, I probably have to begin from the current price range. So what is the current price? So let me just quickly zoom in to the current price. Let me just delete this. And to my surprise, always hustling with network. Always hustling with network. All right, so let me zoom this to the current price, and I want to show you something very important here. I want to show you something very important here. Okay, so this is the current price. So remember, we said the order flow was bullish. So if I just zoom this in, and to the left side, what I'm seeing is this structure high. And if you've done liquidity, the different types of liquidity and structural highs are also part of liquidity. So prices always seek to take them out. Now, if I look at this point, if I just get my horizontal ray and place it above or on top or at this price position, you can see that where the current price is, we have taken out liquidity. Now, let me just zoom this chart in. Let's look at the previous structural high. Okay, previous structural high. Let me zoom this chart in. Okay, and here was our other previous structural high. So guys, if you see from this point, this structural high, we saw prices taking out the structural high and it retraced back into, so it took out this level from here, then it retraced down to this level. So what I'm expecting on the current price after we took out that high, I'm expecting the prices to fall. I'm expecting the prices to fall. So what I'll do is, mhm. Okay, so let me zoom this chart in again. So if I zoom this chart in again, what I'm seeing here currently, let's say this was the break of structure. So this, so you can trade FVGs with break. There are some break of structure FVGs. So this was the line, and we had an FVG there. It played out. It played out again. This line here. Remember, it was the previous break of structure this side. So if I was to trade this FVG, let's say I spotted above this for some reason, though for some reason, some people would want to trade this. So for some reason, we see that there's some people who would want to trade the AVGs when they are above the points of structure. But every time I break structure, trading above is very risky to me. So let's say for some reason you traded this FVG here. As you can see, that FVG has a lot of confluences that I would use to take this trade above this line. Though I don't trade every time I break structure, trading unless otherwise, but I normally do not trade. So let's say if I was to place this here, okay. Sorry, network is always tripping. Okay, now I decided to go long for this position. What would have happened? So there are two types of entries that people use. There is the conservative entry and there is the aggressive entry. I'm a more conservative guy. Let's say you were aggressive. You're a very aggressive guy. You're very aggressive. So what they normally do is they place the stop loss among. So this AVG becomes the stop loss, and they target. Let's say you target in the 1:2. So you see that you would have taken profits, but I do not. So if you target it, if you trade like this, normally you would made a lot of profit. Basically, a 2 to 1 is would have happened there. But you know me, I'm a very conservative guy. So basically, those of course I've got other models that allow me to reduce my stop loss, but so those that's in the paid mentorship program. But for this free one, we can see that if I was to target the 2 to 1 from this level, the trades would have retraced. I would not have made money. So from there, this was a failed. So basically, what happens every time you trade AVGs and your AVG fails, there's always another possible trade. So this AVG failed, and what we saw a violation for. We saw prices violating this AVG. You see prices closed below. So what I was expecting, and everyone who trades AVGs, what they expect is that when prices come back to the AVG, when prices come down to this box here, what they expect normally is that prices will bounce off and continue up, right? That's what they expect. But of course, we saw price did not do that, so that's violation. So every time we violate an FVG, what we make is an IFG. So this FVG becomes an inverted fair value gap. So our entry is not a fair value gap, but it's an inverted fair value gap. So now this same fair value gap that failed, what I would like to do is I would like to extend it. I would like to extend it. And let me just cover this same space here. Okay. Come on. Let me just try to cover. Okay, just a minute. Let me try to cover that space there. Ah, like I'm trying to cover this, but the cursor keeps on sliding out. Okay, okay. Ah, guys, as I said, I normally use Wi-Fi, and I think I have to change my network because otherwise this one is very pathetic. All right, so yeah, so basically, so what happens is there's a row of reversal with AVGs. So this AVG was supposed to serve as support, but for some reason, we saw this AVG, we inverted this IFG. So this line here becomes resistance, of which we saw here price. The first step, it pushed the market down, went again, this level pushed the market down. So basically, at the current price, what I'm focusing on here is this FVG, this fair value gap here. Okay, so this is my ideal fair value gap. So if prices tap into that level, I'm expecting prices to tap. And normally, I think from this level, then I would. So let's just try shorten from this level. We get this two here. Uh, what network do you guys use? Because here a network has been really been pathetic. So now let me just get my two here. So yeah, I'll get the short position here, and I would to get this from this point, then I would drop this down. Uh, come on, come on, come on, come on, come on, come on. Okay, so I would to get, I would to get this, and my stop loss. Why am I covering this point? Because I'm seeing this point has been a point of resistance, right? Very good resistance there. Let me just drop this level. Okay, and my entry will be here. Yes, and cover that. Let me just drop this. Okay, let me just do drop this again down. Come on, come on. Okay, so alright guys, crazy thing is when you are trying to, okay, down there, okay, and let me just get this two here. Drop. Okay, okay here. Okay, okay, okay. Let me just do this. Yes, from there, then I would get a 1:2 risk reward ratio. Let me just drop this again. Yes, so basically this is my focus. If I was to trade GBD USD, I would get that would be this is my focus the net. Of course, I'm expecting prices to rally more down and take out this low here. But currently, this is my focus on GBD USD. As I said, we broke this structure here, and every time previously when we break points of structure, we see prices reversing, and of course we saw this confirmation here. As we saw, we inverted this FVG, then prices came back and traced this guy. This guy proved a very strong resistance level, so I'm expecting prices from this point to drop in a 1 to 2 risk reward ratio. All right, so this is the focus on GBD USD, guys. So don't forget to subscribe to my channel for more videos, and have a blessed week ahead of you. And if you're not making money, it's a long